Ladies and gentlemen, good day and welcome to the High-Tech Pipe Limited Q2 and FY2026 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this call is being recorded. I now hand the conference over to Mr. Anish Bansal, Whole-Time Director from High-Tech Pipes Limited. Thank you and over to you, Mr. Bansal.
Good afternoon, everyone. On behalf of High-Tech Pipes Limited, I extend a very warm welcome to all our valued investors, analysts, and participants on this Q2 FY2026 investor conference call. I'm joined today by Mr. Arvind Bansal, our Executive Director and Group CFO, and Mr. Arun Kumar, our Company Secretary and Compliance Officer. At the outset, I would like to thank each one of you for your continued trust, engagement, and support in our growth journey. Financial and operational highlights. Let me now share an overview of our financial and operational performance for Q2 FY2026. Sales volume grew by 1.78% YOY to 1.25 lakh tons, reflecting stable demand from our infrastructure, construction, and dealer segments despite seasonal softness. Revenue from operations rose by a strong 21.66% to 858.77 crores, driven by a better product mix, improved realizations, and higher contribution from value-added products. EBITDA stood at 44.33 crores, up 5% YOY, while EBITDA per ton improved by 3.24% to 3,540 rupees, supported by efficiency gains and cost optimization measures. PAT increased by 11.86% to 20.26 crores, reflecting consistent operational performance and disciplined financial management. Capacity utilization for the quarter remained healthy at around 66% and is expected to improve with the commissioning of new capacities. This performance has been achieved in a very challenging external environment, which was dominated by extended monsoon and declining steel prices. This proves the company's resilience of strength to deliver consistent performance despite adverse market conditions. Now discussing the half-yearly numbers. The sales volume increased by 1.66% to 2.5 lakh tons, supported by steady demand across key sectors. Revenue from operations grew by 4.91% to 1,650 crores, demonstrating resilience despite moderate steel price trends. EBITDA stood at 85.36 crores, broadly in line with last year, with EBITDA per ton at 3,425 versus 3,462 in H1 FY25. PAT for the first half stood at 37.56 crores, up from 35.72 crores in the same period last year. On the balance sheet side, debt equity ratio remains healthy at 0.21 versus 0.15 last year. Current ratio stood at 2.09x, demonstrating sound liquidity. Overall, we continue to maintain steady volume growth, margin stability, and financial discipline despite a dynamic operating environment. Now coming to strategic and growth initiatives. Firstly, the ongoing capacity expansion. Our 3 lakh ton capacity addition at the existing facilities is now in the advanced stage of commissioning. Trial runs have already commenced and we expect commercial production in Q3 FY26. This will meaningfully augment volumes and strengthen operating leverage in the quarters ahead. The Greenfield Manufacturing Project at Hindupur, Andhra Pradesh, near Bengaluru. A landmark milestone is the foundation stone laying of a Greenfield Manufacturing Project at Hindupur, Andhra Pradesh, a crucial step towards our long-term vision of achieving 2 million ton capacity. The project, with a planned 1.5 lakh ton capacity, will focus on value-added coated products catering to infrastructure and industrial sectors. We sincerely thank Shri Nara Chandrababu Naidu Garu, Honorable Chief Minister of Andhra Pradesh, for foundation stone laying ceremony and for the positive industrial ecosystem that enables such long-term investments. This project is expected to be completed by Q1 FY28 and will expand our footprint in Southern India, enhance product diversity, and drive future growth. Talking about the branding and marketing initiatives, the company launched its new nationwide television commercial and various marketing campaigns during this quarter, which enhanced brand visibility and generating strong responses from our dealers and distribution network. We have added several new SKUs in this quarter, mainly jumbo steel sections up to 300 series, enabling us to serve larger infrastructure projects. Our pipes and tubes are being supplied to several prestigious government and industrial projects, reflecting the growing trust in our quality and reliability. On the export front, Hi-Tech is now supplying to a wider set of international markets, strengthening our global presence. On the solar front, company continues to get repeated orders from its clients and has established itself as a trusted and reliable supply chain partner in the renewable energy space. Coming to financial discipline and sustainability, even as we pursue aggressive capacity expansion, we continue to uphold financial prudence. All our ongoing and upcoming projects, including Hindupur, are being funded entirely through internal accruals. We remain committed to responsible growth through energy-efficient operations, process digitization, and sustainability-oriented approach that supports long-term stakeholder value. Looking ahead, we see strong underlying demand from infrastructure, construction, and renewable energy space. Our near-term focus areas are improving capacity utilization to 70%, enhancing the value-added product mix, strengthening southern and export markets, seamlessly progressing toward our 2 million ton capacity milestone. With the commissioning of our new capacities and sustained brand momentum, we expect improved operating leverage, enhanced margins, steel price stability, and stronger return ratios in the coming periods. Thank you. We now open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, to ask a question, they may press star and one now. Participants who wishes to ask a question may press star and one on their touchtone telephone now. The first question is from the line of Pallav Agarwal from Antique Stock Broking. Please proceed.
Yeah, good evening, sir. So just had a question on our, on our volume guidance. So, are we sticking with about 6 lakh tons for the FY26? And broadly, what would be our EBITDA guidance, EBITDA per ton?
Yeah, good afternoon, Pallavji. So, this for the first quarter, we have done approximately 2.5 lakh tons. And in the H2, given, a better market scenario and the festive and the monsoon period also be already over and a strong order book in hand. So 3 to 3.5 lakh tons is what we are aiming to achieve in H2. So overall, our total volume between 5.5 to 6 lakh tons is intact. Regarding the EBITDA guidance, so this quarter we have achieved 3,550 rupees per ton. And with steel prices now stabilized, and I don't think there will be further steel price decline in H2. With that, there will be a significant improvement in the EBITDA per ton. Also, the new facilities which are getting on stream in this quarter, they are mainly focused on the value-added products like galvanized and special SKUs. So that will also help in increasing the blended EBITDA per ton.
Sure. Okay. And how have the Patra prices moved? So what would be say, the differential between HRC and patra-based pipes at current levels?
So right now, I think the differential is around 5 to 6,000 rupees per ton between the primary and the secondary. And the secondary is also under a lot of pressure because of the monsoon and all that. And the gap has narrowed in this quarter. And, I see, once the demand for, the TMT and secondary steel, when it comes back, so the gap should further bridge down between the primary and the secondary players. So the demand should be, significantly better in H2 for the primary steel producers.
Okay. And sir, I think, our debt has gone up this quarter. So, is it, what is like our CapEx guidance, for 26 and 27?
So yes, our 3 plants are coming on stream, in this quarter. So that is mainly, why this has gone up. But I think, the generation will start happening from this quarter. And we hope, as we get, cash flows from this, so this will get stabilized in the short term.
Sure. And in the CapEx guidance, sir, we could help with 26, 27. What is the CapEx guidance?
So FY27, approximately 120 to 130 crores. This is what we have been, this is the capex what we've been doing now for the last 2 to 3 years. So the similar kind of capex.
Okay, and 26, I think we had built in about 200 crores. I just wanted to check whether.
Yeah. That is it.
Sure, sir. Okay, sir, I'll get back in the queue.
Sure. Thank you.
Thank you. Participants who wish to ask a question may press star and 1 now. The next question is from the line of Karthik, an investor. Please proceed.
Hello.
Yeah, good
Yes,
afternoon.
Ms. Karthika.
Yeah, hi. Hello, sir. My question to the company, sir. First of all, congratulations for the growing results for this quarter. Sir, I want to understand that how and in which phases we will be adding this 1 million ton capacity in coming years.
So, thank you, Vantika. So by FY28 and mid of FY29, so we'll be commissioning this additional 1 million tons. This will be partly brownfield and partly greenfield. And we have the land already in place, and at several sites, the approvals are already there, and we have just started construction in one of the sites. And in coming quarters, we'll be starting the other sites as well. So, 2 million ton journey is fully planned, and the execution has begun regarding this.
Okay. Thank you so much, sir.
You're welcome.
Thank you. The next question is from the line of Pratik from Smith. Please proceed.
Yeah. Hi, sir. Thanks for the opportunity. I just wanted to ask a question on the realization per metric ton. So on a YY basis, it's almost grown at 20%, and on a quarter-on-quarter almost it grown 8%. So what has led this? Is it entirely because of the value-added mix improvement or any other reason for that?
Yeah. Hi, Pratik. Good afternoon. So this is due to several factors. One is, there is, we have started export vertical, so the value there is much higher. And the new products that we have launched in the value-added stream, the coated products, the special SKUs, that has also helped us in achieving higher realization per ton. Along with that, there is a trading volume which you may not have considered. So, that will, even it out.
Okay. So what was the export volume? Can you throw some color on that in percentage terms or in absolute terms?
Currently, it is in the range of 6,000 to 7,000 tons per quarter, and it is growing steadily.
Okay. Okay. Thanks. And does that realization per metric ton is sustainable going forward or might get moderate going ahead, sir?
No, we are striving for better. Now the new capacities, again, they are mostly in the value-added segment, where the realizations are more than 10 to 15,000 rupees per ton compared to the normal uncoated products. So going forward, this should be intact.
Okay. Thank you, sir. I'll back in queue again.
You're welcome.
Thank you. Participants who wish to ask a question may press star and one now. Participants who wish to ask a question may press star and one now. The next question is from the line of Pratik from Smith. Please proceed.
Yeah, thanks for the opportunity again. Sir, I just wanted to ask a question that how much you are targeting the value-added mix going ahead? You could.
Yeah, Pratik, as of last quarter, our total VAPs share was around 37%. And, we'll close this year at 41 to 42%. And next year, there'll be a substantial jump because these new capacities and the value-added, so 45-47% is for FY27.
Okay. Thank you. And again, you are maintaining your EBITDA per ton guidance of almost 3,500 to 4,000 in FY26, right?
Absolutely. This is, given, the steel prices have really, played a very, detrimental role. And now I think, prices globally and in India, they have stabilized. And if we don't see any further reduction, the EBITDA per ton should be even better.
Okay. And sir, just on steel prices. So basically, the government has implemented the safeguard duty on the steel import. So that has benefited the steel industry and you as well.
So yes, the imports which were coming at very low prices from countries like Russia and China. So that has stopped, and that was creating a negative sentiment. And this 12% safeguard has at least arrested these cheap imports which were causing a negativity in the industry. So that has gone away. And now, the talks are, the steel ministry is considering, raising this 12%. And if that comes in, so, it'll be very positive for the entire steel sector. So we are expecting some announcement in coming months on this subject.
Yeah, okay. Got it, sir. Thank you.
Thank you. Participants who wish to ask a question may press star and one now. The next question is from the line of Vartika, an investor. Please proceed.
Yes, sir. So I have another question, and my question is, what is the peak EBITDA level the company considers?
So, Vartika, in a stable market and with our volume, with our value-added mix at 50%, I think 5,000 rupees per ton is a very realistic and a practical number. We are just waiting for the right moment and the opportunity to be that. And I'm fairly confident that the worst for the industry is behind us in H1. And we are seeing some green shoots, the demand coming from the infrastructure side in this quarter. And if this momentum builds up, 5,000 is our a very achievable number. So we are just waiting for that moment.
Okay, thank you so much, sir.
Thank you. The next question is from the line of Manan from Master Growth 369. Please proceed.
Hello. Good evening, sir.
Yeah, good evening.
Yeah, sir. Congratulations on a great set of numbers. Sir, I just wanted to know about your a greenfield project that you're setting up for a color-coated sheet in Jammu. So what is the progress on that?
Yeah, good evening. So, the project has been commissioned. As I mentioned in my speech, the trials have already started there, and hopefully we'll come out with a commercial production announcement very soon.
And so what is the volume that you're targeting from this particular manufacturing plant?
The installed capacity is 1 lakh tons, and at a 65%, so we are looking at volume of 65 to 70,000 tons per annum from this plant.
65 to 70,000 tons per annum.
Yes.
Okay. Thank you, sir. That's it from my side.
Thank you. The next question is from the line of Karan from Asit C. Mehta. Please proceed.
Yeah, am I audible?
Yes, Karan, I can hear you.
Yeah, so I wanted to know more about value-added products, like what is the margin profile for value-added products compared to general products, and how is the competitive intensity in value-added products? So could you please throw some light on that?
So, Karan, the EBITDA per ton for value added is between 4,500 to 5,000 rupees. And that consists of various, coated products, galvanized products, and there are special SKUs like jumbo color sections. And even in the export market, the EBITDA per ton is, much better. So all in all, our value-add products fetches a EBITDA per ton of 5,000 rupees per ton.
Okay, sir. Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Mayank Agarwal, an investor. Please proceed.
Hi, and for the opportunity, hope I'm audible.
Yeah, Mayank, can you be a little louder, please?
Yeah, is it better now?
Yeah.
Yeah, so I wanted to know what I joined the call late. So the brownfield expansion which was going to go live in Q2, has it gone live?
Yeah. So the commissioning has been done. The trial productions have already started, and very, very soon we'll be coming out with the commercial production announcement. So all the major teething problems have already been addressed, and we are very close to our commercial production in these units.
So post commissioning, we are giving the target of 5.5 to 6 lakh tons for the year, right? Including this capacity.
That's correct. Yes.
Okay, that's it for my side. Thank you.
Thank you. The next question is from the line of Sandeep Gupta, an investor. Please proceed.
Hello, sir.
Yeah.
Hello.
Yeah, good evening, Sandeep.
Good evening, sir. Hello. Good evening, sir.
Yeah, Sandeep, I can hear you. Please go ahead.
Sir, I want to know about the what type of products you are going to offer from new facility in Hindupur, and what is the EBITDA for 0.3 million capacity?
Sandeep, we'll be making value-added coated steel tubes from this, and we'll be also targeting the international markets from this facility. The tubes which are not being produced in India yet, we would be producing these very high-value products from this facility. And this is going to be an integrated facility where we'll be having all the operations under one roof.
Okay, sir. Thank you so much, sir.
You're welcome.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Anish Bansal for closing comments. Over to you, sir.
Thank you. Before concluding, I would like to express my gratitude to all our customers for their unwavering trust, our employees for their dedication, our dealers, partners, and vendors for their collaboration, and our investors and board members for their confidence and support. We also thank Shri Nara Chandrababu Naidu Garu for his gracious presence at the Hindupur Foundation event and for sharing words of encouragement. At High-Tech Pipes, every initiative from capacity addition to brand building is aimed at creating long-term sustained value for all our stakeholders. Thank you all for joining us today. Thank you.
Thank you. On behalf of High-Tech Pipes Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.